Hey everybody, it's Sunday. We made it through the week. Let's jump in. It's the weekly Q&A. Today we're going to talk about the best day to DCA Bitcoin. And has it changed since the ETF launched? The answer is yes, it has. Everything has changed. Also, we'll talk about the next bear market. We'll talk about NVIDIA's 10-for-1 stock split coming and what people should do. Also, AI's role in trading. How I would invest $250K if you fall into a bunch of money, rotating miners, the future of Pyth. We'll look at Beyond.com and Zim. Beyond.com, I think, is the formerly Overstock company, and a whole bunch of charts. And let's jump in. Thank you as well to everybody for coming. And this is not financial advice, just a guy on the internet. And a shout out to everybody on Patreon. All the questions every week come from the team on Patreon. And another team looks at all the questions and identifies the ones that are most popular, that people really want addressed. So if you're wondering where these things come from, not from me. All I do is answer the questions, and they're given to me. So here we go. First question is, and oh, by the way, thank you to the mods in chat, T&D Tesla, K8, Sean Donnelly, and all the other cool people out there, Bert Frank, and BD McGee, and so many other people. So let's go. First question is IC3 Blink. I recall a video a while back regarding which days were best to DCA Bitcoin. If I remember correctly, Monday and Wednesday were the best. Is this still the case? Well, it's not still the case, and you are half right. So the quick analysis I did, I analyzed all of the Bitcoin days since inception. We're going back 14 years of data. And the result was the average historic gain per day is 0.51%, which is crazy when you think about it. Imagine buying an asset that goes up 0.5% a day on average. But that also takes into account the crazy gains that were had at the beginning. The best day for Bitcoin ever, it went up 18.19%. And the best day to DCA or buy is Monday. And the second best day was Sunday. That was before January 11th, 2024. Now it's changed. Now, the best day is to buy is still Monday, but the second best day to buy is now Saturday. It's moved forward. And the lowest average price, Mondays, still has the low average price, even just taken from January 11th to today. And pre-ETF, also, the pattern of Mondays being the best day has continued after the ETF launch. Highest average prices, though, Tuesdays and Wednesdays. Do not buy on those days, ladies and gentlemen. And what else? Yeah, so it looks like, obviously, on the weekends, things are different, low volumes. Early Monday morning is the best place to get in, hopefully before the DCA show, because always, literally always, Bitcoin pumps at 7:30 a.m. Pacific, 10:30 a.m. Eastern. It's as if people get to the office Monday morning and then they hit the buy button, buy. But then all the buy pressure kind of dissipates. By Tuesday or Wednesday, it kind of sells off. And then it increases towards the end. And second best day to buy is Saturday, which means the second weakest day. So hope that helps. And thank you for remembering that question. Next, on DCA Live, this is from Mali Am. On DCA Live, you guys are talking about mistakes people do, e.g. buying an altcoin and holding it down, although it loses value against Bitcoin. Could you please do a video on these mistakes? Well, I did already. Not only did I do a video, I took it a step further. I did all the do's and all the don'ts. The video will be here after this processes. These are the bull market's do's and don'ts video. And I put together a quick summary of them. And these still apply to this very day, even though that video was made in April. It's not that old. It's only 2 months old. But these are the do's, okay? First of all, I always say follow the developers, follow the adoption, follow the money where people are investing. Research like hell. Know exactly what's going on. Stay on top of your assets. This is why I always stress as well, never own a lot of many things. When I see funds with 60 holdings, I think, oh my goodness, I calculated this in the 90s that it makes no sense to have a lot of assets. You got to have very high concentration in the winners, okay? I spent all my time identifying winners early. That's my strategy. Things like NVDA. Tesla hasn't exactly pumped, but it's still up from all the buying opportunities we had over the years. But NVIDIA, Cleanspark, MicroStrategy, Solana, these aren't accidents. And they're all the best performing assets because of the work you need to do upfront. But hold very few assets, but make sure you're in the winners. Holding 60 of anything will hold you down. Also, less is more. That's the point I'm trying to make there. Patience is key. If something doesn't pump immediately, wait. During the bear market, we saw Solana go to $8. And that was the time where you just put all the chips on the table, which we did. And you never go broke taking profits. Remember that. They're the do's. And on the don't side, don't FOMO, don't chase. I always say don't chase, replace. Don't invest in old technology. Don't listen to pumpers. 99% of crypto is a scam, and it's probably actually higher now with all the new coins. And don't be left holding the ghost chain bag, which goes back to follow the devs, follow the adoption and money. And even though there can be ghost chains with so-called a lot of development activity, sometimes it can be artificially inflated too, so watch for that. I will not cast any aspersions here, but I know who they are. And don't ignore big market cycles. Okay, always zoom out. Thank you, the tree. Always zoom out. Know where you are on the journey. Know where the macro is. We'll talk more about that later as well. It's so key. So I hope that helps. Next question from Futureproof and Puffin. I will soon have 10x as many NVIDIA shares as I currently have due to the upcoming 10-for-1 stock split. Indicators obviously can't sort this information out into account. So what should I be using to help judge when to sell or buy? And when you say indicators, I assume technical indicators. And this is a fallacy that many people don't actually realize. But let me break it down. First of all, what is impacted by the stock split? There's only one thing, one technical indicator that's impacted. That is anything to do with volume. So if the price right now, say NVIDIA is $1,200, which it is, and the volume on a daily basis is 1,000 shares. It's a simple example. That's simple. But if the price goes to $120, i.e. the 10-for-1 stock split, you take 1,200, you divide it by 10, you get $120 each. The volume becomes 10,000 shares if nothing else changes. So the volume analytics, volume indicators are not relevant. Okay, they do change. So don't use those. Everything else, though, is the same. Absolutely everything. So, for example, moving averages, recalculated based on adjustment historical prices. For example, a 50-day moving average just gets divided by 10. Relative strength index, they are adjusted to prices too. So the RSI remains accurate and the same. Bollinger Bands remain the same. Trend analysis remains the same. For example, if NVIDIA was in an uptrend before the split, it will continue to be an uptrend after the split, as the split does not affect the underlying fundamentals or market sentiment. Also, support and resistance levels. These levels will be also adjusted for the 10-for-1, and they will not change. So, for example, if you had a support level at $1,000, that new support level becomes $100. It's super simple. And chart patterns, things like head and shoulders, triangles, flags, all remain valid as long as the price is adjusted accordingly, which it is. Let's go back in time and look at another chart. This is Amazon, all right? Amazon did a 20-for-1 stock split, if I'm not mistaken, in June 2022. I was in Amazon and I got out. But what's important here, you can see there's always a pre-split run that I covered last week and the post-split duck. That's visible here. Also, the red shadow on the ATR model highlights the bear market, where all of tech was in a bear market. By the way, that red shadow works for all assets, but they have different bear markets. The crypto bear market is not the same as the technology bear market, etc. So bear that in mind too. And you can see it rebounded, but Amazon is back at the level it was before it split. Okay, so the price of Amazon now is, I can't even see the chart very well. Hold on a second. Let me make sure I can get it right. 184. And it was actually at 184 in 2021, early 2021. So basically, 3 years, it's gone nowhere. Now, the point is, the chart is the same. That's the big takeaway here. It's just divided the original price by 20. Okay, so that would be, if this was not split adjusted, it would be like $3,600 a share. Now, let's talk about a couple of other things regarding NVIDIA, because this is important. First of all, I tip you as well to Sanjay for getting me this chart last night. Remember, money flow determines the move of an asset, and semiconductor weight in hedge funds are now higher than ever before in the history of the world. Okay, going back to following the money, hedge funds are placing big bets on semiconductors, chips. That includes NVIDIA. Now this, I'm going to continue on because there's a second question regarding NVIDIA, and I answer some of the previous stuff too, but basically the TA does not change. It's completely the same. All right. Now this question is, do you think NVIDIA is overvalued from a TA perspective or fundamentally overvalued? Well, first of all, TA does not determine valuation in my humble opinion. TA valuation is determined by FA, I call fundamental analysis. TA is to determine when to strike, when to buy, when to sell, when to DCA. That's how I use TA. Okay, so I want that to be very clear. Some people will believe they only do TA, but I don't think that's a clever way to go. Now, your question is, considering it's trading at a forward PE of roughly 45, it's well below historical averages. Sure, major tech companies are actively developing their own GPUs, but I still don't see how this can disrupt NVIDIA in the grand scheme of things. Trying to decide whether to sell some shares post-split. Canadian hodler. So this is a super good question. And as I kind of, my thesis is, there comes a time in every asset's life that you don't hold on to them forever. You look at where you can rotate into a faster, cheaper horse. NVIDIA has been on a tear, an absolute rampage that we see very rarely in our lives, okay? It's all driven by the AI revolution. A lot of people still believe as well, the AI revolution is done. It's peak AI. I need to say peak AI. It's not. We're in the early innings, ladies and gentlemen. So let's talk about a couple of things. First of all, getting back to your question regarding the historical PE ratio. This is the historical PE ratio of NVIDIA over the last 10 years. It's 49.74, I calculated. And the current PE is about 45 to 41, depending on how you measure it. And again, it is, well, it depends. The current PE of 70 is higher than the historical average of 49.74. But again, it depends on how you measure it, what rolling ratio you use, etc. And the PE ratio was highest in April 2023 quarter at 143.04, when the price of the stock was only 277.49 and the EPS was $1.94. Remember, this is kind of important. So there comes a time when people start realizing the value of a stock, and then the Wall Street analysts have the data they need to punch in the growth rates. They assume they continue, and then they say, well, the growth has been very strong the last 3 quarters. What happens if it continues for another 3 quarters? Yes, it goes up. Therefore, they bid the stock up. Therefore, the PE gets to 150. And that is how markets should work. You play where the puck is going to be. But sometimes we like to be in positions a little bit earlier because you can get them a little bit cheaper. So that's the first thing. Second thing is, my other thesis is winner takes all or winner takes most. This is the chart of NVIDIA versus Intel. You can see Intel down 45% and NVIDIA up, I don't know, hundreds and hundreds and maybe 1,000%. Crazy, crazy big numbers. So you're dead right. The competition are not coming, but there is a slight catch. NVIDIA revenue is slowing a touch. All right. So you can see the 2023 growth is 126%. 2024 year to date is only 97%. And 97% is already phenomenal. Even growing at 50% is not sustainable over the long term. So let's look at the chart and try to figure out where we should go. This is NVIDIA on the ATR overbought. Current price is at $1,200 on the nose, if I'm not mistaken. It did go a little bit higher than that. It is flashing a sell signal, but there are a couple of things that you need to take into account of this. And first of all, that chart is just a rampage. And again, it stresses what we discussed at the very beginning, to be in the right assets at the right times and not to chase. So if you wait till $1,000 to buy NVIDIA, it goes to $1,200, you made 20%. But if you buy it under 200, and it goes to 1200, you make an awful lot more. That's why I say get in early, get in hard. But then there comes a time when these things are fairly valued. And again, the growth slowing a little bit could be cause for concern. But let me tell you some of the good side. Now, after a 10-for-1 stock split, the price will come down. So people typically, humans, like to buy 100 shares or something, or at least make it their aspirational goal. If a stock is $1,200, they're not going to buy it. But if it's 120, yeah, they'll pick up a couple of shares for sure. And there's also other stuff happening too. So the cheaper price could drive a lot of retail buying. It doesn't bother institutions, but NVIDIA do have continuous innovation. They have consistently introduced new and improved products. They got this thing called the GH200, which is the Grasshopper super chip. And this is way better, quicker, faster, and it can even accelerate generative AI applications even better. It is far more performant. It can deliver significant performance improvements over the other H100, and it can help HPC workloads, which is high performance computing workloads. It's also designed to address the growing demand out there. Everybody needs more chips. There is a wait for them. You can't just say, oh, give me 50,000 H100s, costs a couple of $1 billion. No, you got to wait in line. And NVIDIA's products are well positioned to meet this demand, and the demand is insatiable as far as I can see right now. They also have some other advantages that the other chip companies do not have. They have AI Enterprise, which is the software that surrounds the hardware of the chip. They have Omniverse, they have CUDA, and these also support a high range of other things. The other thing that's really cool about NVIDIA is they have extensive partnerships. They are working with everybody from Mercedes-Benz to humanoid robot companies and everything else in between. So again, insatiable demand. Could it go up more? Yes. Is it going to double again? No, not for a long time. So that's kind of what you're looking for. Things that double or triple. And at this stage, going up to say 1276, which is kind of my bogey roof target, after the split tomorrow, retail comes in and they start buying $127, not bad. $130, not bad. But really, when you look at the relative market cap, it's huge. But still, it's possible. But I believe it's time to rotate maybe a bit away into other assets. That's just the way I do it. And that's not financial advice. Now, next question, which ties into a lot of what we said before, from Inside the Dragon. I recently sold my rental property and have $250,000 to put to work. I have a thriving business and low mortgage payments on my castle. The castle, by the way, is our vernacular for your own personal house. I want to escape the matrix. If you were me, what would you do? Well, this should be a very, very detailed video. But if you know me, my whole thing, how I got started was covered calls, selling them 6-week intervals, out of the money, build a bag, and then I got a lot more sophisticated. But that was in the 90s. And then took the gains, bought real estate. You just sold real estate, so that's a bit of a twist. But let's talk about what you do. First of all, $250,000 is a lot of money. You can do a lot with that. I started with very little. But you should make 20% your trading bag. Find your rhythm and your method first. I can't stress that enough. Find what you like. You've got to be interested in this. Remember, I always say investing is a blood sport. It's you against the person, another person on the trade. That could be me. Okay? If you don't go in there with very sharp skills, you will get your butt handed to you. And I don't want to be harsh or cold, but you have to take this very, very seriously. You don't go into investing with a lackadaisical approach. You've got to be hungry. You've got to have tools. You've got to be ultra sharp. You've got to find a niche. And that's how you win. So first of all, have that hunger, then paper trade, test your methods. And then when you win 80 to 90% of the time, then you test with real money. And I can't stress enough. You have a system. You need to have a system. You need to have tools and a methodology. You need to wash, rinse, repeat, and refine that strategy over and over and over again. Don't try 15 different strategies. You will fail. Find one. Make it better. That's it. That's kind of exactly how I did. Do I deviate from my strategy? No. Stick to it. And it really works effectively. Also, for the other 80%, if you have a 3 to 5 year time frame, you just got to look at the top disruption plays that are out there right now. You've watched this channel. You know what they are. You need some Bitcoin in there. get it by 1 or 2 Bitcoin. It'll be, 120, half of the money, or 120K or so. Get some L1 name, a top L1, and again, nail that process. And for those big bags that you own, you can actually sell calls against them too. Of course, top disruption plays, things like Tesla, etc. Pretty stunning. So that's kind of what I would advise. Without giving financial advice, imagine that. Copycat. A few times it was mentioned that AI would take over trading. Why is this? Why is there not room for people using your indicators, for example, to thrive when AI is in control? First of all, there is always room. And we are working heavily on enhancing the way we approach things using AI to make the tools even better, even more sophisticated. But let me talk about the threat to retail investors. So first of all, AI trading bots, AI, etc., will bring challenges for retail traders. For example, AI can scan thousands of charts, recognize patterns, backtest things out the wazoo like we do, execute trades at lightning fast speeds, far outpacing what a human brain can do. That is my concern. This gives them a huge advantage in terms of speed and the ability to identify and trade multiple setups quickly, easily, at the speed of light. And well-funded institutions and hedge funds have access to dollars, and they are building very powerful AI trading systems right now with vast computational resources, giving them a massive edge over retail traders. This is what I'm afraid of. And trading bots can operate 24/7 without fatigue or emotion or emotional biases, and that will allow them to capitalize on opportunities around the clock where you might be sleeping. And the other thing is developing effective AI trading systems, however, is not perfect. So AI does have its limitations, but they're kind of like the big things that you should be concerned about. The way we are positioning ourselves to win is not do what some people do and what I used to do back in the day is like scalping and day trading, but much more around a holistic approach to investing. So again, you have to look at where are the AI systems flawed? Okay, they look at historical data, but they sometimes can hallucinate. They sometimes can be trained on the wrong data that can be biased or flawed, and they can read incorrect information. However, what a retail analyst can do, a good one, is integrate macro, so know where the whole macro situation is going. Also, they can understand what drives a stock better than bots. We've seen even the best Wall Street analysts, they can't figure out what Tesla is. They really can't. And retail analysts can spot trends. I anticipate where the puck is going. So we know things years ago that crypto and AI would be huge, but not everybody got that until later. So what we need to do is position ourselves for what I call swing trading. So things that are kind of 6 to 12 week opportunities or longer at the time frame. That's where retail will win. But scalping against bots with millisecond trade timing and doing thousands of strategies at the same time, there will be no opportunity for retail investors. So if you think you're clever and you're going to make it, scalping in the future world, you're not. And that's where we're focused right now. So hope that clarifies your question. Next is from the Yorkshireman. Do you believe the next bear market will present as many good opportunities to run into burning buildings and load our bags, or will future bear markets produce less and less opportunities? Well, in fact, just got a message this morning from a member from Nevada, and they made $500,000 on MicroStrategy alone. And that was one of the burning buildings that we got into, like the Cleansparks and the Solanas. So they'd be life-changing. Now, I wish I could say, yes, we will. But I'm going to temper it with a little bit of reality. And I'm optimistic yet very realistic. So first of all, this is kind of the synopsis of what I think the next bear market would look like. And you've heard me say before that the drawdowns will be less because crypto is now institutional asset class and being heavily adopted and got Bitcoin ETF flows. You assume we're going to have an ETH ETF and so much more. So I do believe, past crypto markets had huge opportunities for long-term investors to stack at very low prices because of like 70, 80%, 90% drawdowns, sometimes 95, 98% drawdowns. But now crypto market cycles I don't know if this 4-year cycle is going to continue, because there is increased investor understanding of the whole space. It's institutional involvement now, and that will stabilize prices with things like, you always hear me talking about the perpetual bid coming in, like MicroStrategy. It's now out of the MSCI, which means money's coming in all the time. ETFs, money's coming in all the time to Bitcoin. Bitcoin is the mothership that drives the whole crypto market cap, which drives a lot of the other names. So from that perspective, it's rock solid. Actually, there was a really cool chart. I'll share it tomorrow on DCA. Brilliant chart. And we're on with Mando and CTO tomorrow. But it talks about, if you exclude the top 10 cryptos from the crypto market cap and you compare those to Bitcoin, so basically crypto number 11 all the way to whatever, 30,000, they haven't gone anywhere at all over the past 3 or 4 years. So again, stresses the point of being in the right names. So there's a lot of losing scam tokens out there. But the point I'm trying to make is, last time around, we could see things that nobody else could see, like the MicroStrategy ARB. Few played that. Now everybody's trying to do it. Solana Advantage, nobody could see what it was. Everybody thought it was dead. Nope, we could see. And the past crypto bear markets had those golden opportunities, like really life-changing opportunities. But also, I think now we're going to have the institutional involvements. There's rumors that exchanges will be built on blockchain soon. And also because layer ones now and their technological innovations are really increasing a huge amount of adoption. So it's like last cycle, some of the stuff was kind of new and flaky. Now it's real. If you've ever used a DEX and then you try to go back to Coinbase, you'll find it painful, absolutely painful. If you want to move money from one place to another, painful. So I could talk about my recent banking experience, but I won't talk about that right now. So that's why I think Yorkshireman, no, we're not going to get these crazy opportunities. There'll be good opportunities, but nothing like what we saw in the past, I believe. So be careful. And by the way, another thing, people sometimes think if things are cheap or 98% off that they're good. No, some of them can be zombies. Hence we built the zombie coefficient. Next question. Let me see. This is from John. I've been successfully using the ATR model to trade in and out of Cleanspark, and I'm thinking of rotating some profits into other miners that are potentially more upside from this point. I have my eye on Bitfarms and Cipher. Thoughts? Well, this is an interesting strategy, and yes, it works, and you're in the right place. So first of all, I should say great strategy, not an interesting strategy. Faster horses run first. That's just how it works. And then the second tier typically gets the day in the sun. This happens for all assets. And then you got the miner AI HPC pivot is also interesting. So the miners are changing a bit. And I did the minority report, I think on Thursday. This is the updated output. Remember, this miner model changes. Every time a stock changes, a market cap changes, a ratio changes, a balance sheet item changes, these ratios change. They're all driven automatically. This is absolutely a moving target. Okay, so from the two names you mentioned, Bitfarms is number 5, Cipher is number 6, but they are much smaller. The Cleansparks, the Riots, the Marathons, the Hives are much bigger shops. And we'll get to why size matters in a minute too. But let's look at the strategies and the ATR model for the pair. And yes, it does work. Okay, this is, you're very clued in to be able to spot this opportunity. So this is Bitfarms over Cleanspark. The lower it is, the more you want it to be in Cleanspark. So if you look at the top, way back at the end of 2022, the end of 2021, I should say, or early 2022, killer time to buy a lot of Cleanspark. And that's what we were doing. But since then, you see what happened. Bitfarms bottomed at, wish I could see this properly, about 0.1 shares to every Cleanspark share. And you see the two buy signals at the bottom as well. Boom, boom, bottomed. Will it mean revert to something like 0.3? The answer is probably yes. Okay, so Bitfarms Cleanspark on the daily, on the ATR model, works very well. The other one, Cipher Cleanspark, on the 12-hour, because there's less history to go on, you can see here as well the exact same setup as Bitfarms and Cleanspark. And again, Cleanspark has outperformed, but now CIFR is kind of bottomed out. We're seeing very clear bottom at that 0.2 level. And again, that should outperform too as we go forward. But there is a small wild card I need you to be aware of. First of all, the bigger the asset, the more money flows into it. The institutions like buying the bigger miners because they feel they're safer. Like Marathon gets the lion's share of all the money from these institutions. Here on the left is Cleanspark, and you can see BlackRock owns 6.72% of Cleanspark. Vanguard own 5.6% of it. Dimension Fund, State Street, etc. They all, I think the top 25 holders own 40 to 50% of Cleanspark, and most of them are institutions. Then CIFR, on the other hand, Vanguard is the biggest holder, 1.8%, and that's probably through some of their index funds. And Invesco, 1.77%. Rodney Page, BlackRock is down there. BlackRock only have 1.22% of CIFR, whereas nearly 7% of Cleanspark. So bear that in mind too. It doesn't mean the Cleanspark, basically, when you look at this chart, historically over the last year and a half, it has far outperformed every other miner. And that is because it was very undervalued. These other names are also undervalued, but will they attract the same amount of money? Not sure. Could this ratio go to 0.3? Possibly, yes. So stay tuned. And Bitfarms and Cipher are very, very interesting names too. So hope that helps you. Thank you so much, John. And from Dog One, when is it safe to get back in the water with Pyth? Seems like a solid project and it will surpass Link in market cap one day. Well, it is better, cheaper, faster. And that's my thesis. It's speed of light technology, tons of integrations, but Link also has a few cards up its sleeve. It's tied to ETH. The world's going to be tokenized. The big players like BlackRock might use Link first, but then eventually they'll migrate to something better, cheaper, faster if they need something to really move quick and be scalable. So I'm not back in Pyth yet. And for those who may not remember, there was a huge unlock. I made at least 3 videos on it, warning people, saying the big unlock is coming. I do it in every Octa as well. Unlocks. And this unlock was like 140% of the existing tokens in circulation. So it was going to be brutal. It's actually held up really well, though. It fell from like 46 cents to about 42 cents. And let me see what it's at right now. For Bitcoin's up 360 bucks. Woohoo. Not a big deal. Let's check Pyth right now, where it is, and then I'll tell you what I'm still looking for. Pyth, 42 cents. Yep, has not changed. But what I am concerned about is this chart here. And a shout out as well to Blue Dragon in the community that built this on Dune. So Blue Dragon, hello there. You can see his little name on the bottom left-hand square. The blue is, the E is actually a number 3 in case you're looking for him online. Now, what I'm looking for here is when the restaking happens. So you can see a ton of big blue lines. That was the Pyth on staking before the big unlock. Now we have to wait for the staking to come back. I want to see a lot of pink before I'm ready to jump in. So hope that helps. And I'm not in yet. Also, the altcoins have had a hard time over the last couple of months. No secret there. But again, alt season has not begun yet. We're still waiting for that to return. And then it'll be bonkers. And then these alts, the winning alts at least, will far outperform Bitcoin. Because that's just what happens. The smaller, faster horses run faster. I wrote a paper on that on Substack. Check it out. It's free. And you can see my theory behind it. And that compares things like Bitcoin, ETH, and Solana as different types of horses, different sizes, different speeds. Very important. Next is from Argelis R. Holding Overstock and Zim. Any chance you look at the ATR model? So I don't own either, of course, but there was a change. Overstock, they rebranded to beyond.com, and the ticker is BYON. So I think they merged or acquired Bed Bath & Beyond, but I don't watch retail because, yeah, it's retail. I'll explain why in a minute. It's not disruption. And stores just have a problem. But I think what else? I think they moved from NASDAQ to New York Stock Exchange. Anyway, point is, this thing can pump. So I want to circle out for a second. we all know the Raging Kitty, the GameStop, the AMC pumps. It's all crap. If you're playing with that, you're playing with fire, everybody. But Bed Bath & Beyond was one of those memes as well. It's like they pick things that are dead or zombie companies, and they find plays that are heavily shorted by hedge funds, and then the Reddit communities jack up the price to screw the hedge funds. And that's just the game here. But that's not a game that I play. But you can see here on the ATR model, it's a freaking zombie. All right. And the companies that are going to die. Let's look at why it's bad. You can see revenue falling, net income, none, no profits. And that's just an ugly situation to be in. I don't think we need to say any more. If you are investing, you want something that has extreme disruption, but also revenue growth and profits. Okay, that's where I draw the line, unless it's something very revolutionary. Let's look at Zim. Zim on the ATR also flashed a sell. It is at level 1, heading down probably to level 0.5 again. And maybe you can range ride this, but the overall trend is nasty and down. But let's dig into some more Zim stuff. Zim has no growth and also loses money. Actually, it made a tiny bit of profit last quarter, the little green bar, but overall, not so good. But what really concerns me about Zim is this. The debt levels are alarming. All right. The green is cash, which is they've got about $1 billion in cash and they've got $5.5 billion in debt. This is scary. This type of chart would give me nightmares at night. So don't touch. Just so many good things to be in. Remember, be in the top 1% of assets. These things will be in the bottom 3%, 5% of assets. So again, hope I didn't offend you, but they're not things to be in. And favorite part of the week, we have some new babies in the family. This week, we donated to National Marine Life Center to help support care, food, and shelter for the following: Black Raspberry, Chunky Monkey, Maple Walnut, Butter Pecan, Cookies and Cream, Chocolate Chip, Cannoli, and Vanilla Bean. I love those names. They're cute. And thank you as well for making it all possible. Tomorrow morning, 7:30 a.m. Pacific, sometimes 7:40. Give or take 10 minutes. We're on all of our channels. This is DCA with Mando and CTO. And we have some juicy agenda items. And also we'll be talking about the carry trade that everybody's asking about too. I did a detailed post on it on Patreon this morning. We'll dig into that later, and we'll talk to Mando, who's got direct contacts as well with exactly what's going on the ground too. So I hope you like the content. I'm going to open up to some questions live, and a big thank you to the mods in the chat. And I made it. Woo. 40 minutes. Thank you for being here too. From all over the world. It's so good to see everybody. Now let me pull up the questions and drink some white tea because it's afternoon. So no more coffee. BD McGee, thank you for your hard work. My pleasure, buddy. Mr. Shake, are you still bullish on Asana, Solid Chat, and Flux? Yes. In fact, Flux had some new results. Asana, my commitment was I would buy these things and hold them for a year at least, unless the thesis radically changes. So I still hold all three, and I will let you know as soon as I change anything as well. And I think, is it reasonable, your question, to get a 2x from these? We'll see. These are very, very risky. So I always say never put more than, so if you have like a Sol position, let's say $1,000, never put more than $50 into these Sol alts, 5% of your Sol bag, which is only a portion of your whole bag too. Again, very, very risky, but I will do a Sol alt update video. The reason I haven't is because the alts have just been lackluster. In fact, Nosana is holding up one of the best. Chat pumped a little bit last week. But yeah, I think all these names have huge use cases in huge markets, and they're very, I believe, undervalued assets, but they're not getting the attention right now. What's getting the attention are the memes. And as I also describe, all these memes launching, like Pump It Fun or Pump.fun, is launching 10,000, 20,000 coins a week. They suck in the oxygen from all the other assets. It's one of the reasons why Bitcoin maxis hate all other cryptos. because all of the cryptos also suck the oxygen from Bitcoin. It wouldn't actually surprise me that some Bitcoin holders are pivoting now to other assets, just like the question earlier. You know, you made a lot of gains on Cleanspark. So it's time to rotate into another asset. Yeah, that's what you do. You know, don't hold on to, don't get married to any asset ever. So I will also be buying more Sol alts or increasing my position size in existing ones. I'm just waiting for the time, harboring cash. We're hoping for a big dip, but that may not be happening too. Things are stable, and that's good. But yes, I will keep you posted. Robin Wood, as an MBA, how many graduate business schools have crypto as an elective, I wonder? I think Stanford has a crypto course right now. MIT had a Bitcoin course under Gary Gensler, who was a teacher. Now he helps protect us. I hope people got that arrow sarcasm. Yeah, I think quite a few. And if you are considering an MBA school, first of all, consider going in the first place. They're very expensive. At least they were back in my day. And I'd imagine they're $250,000 now each at least. But also pick one with a good syllabus, because there's no point in learning what you can learn on YouTube in an hour and a syllabus that's 20 years old. You want the complete syllabus of an MBA course to be about what matters now. How do you embrace AI? How do you embrace crypto? How do you learn about disruption? How do you build a startup effectively and efficiently? They are the skills you need. You don't need to learn about the stuff we used to do back in the day, because you can learn that now on YouTube. So I hope that helps, Robin Wood. From Kate, what is your top peeve of doing what you do every day? Ooh, this is like a baby reindeer moment. I get up on the stage. So, yeah, all right. And I don't want people to be upset by this, but I work 7 days a week. That's my commitment. I never miss a day, no matter what. I will make a video every Christmas Day, every New Year's Eve, every New Year's Day, every whatever holiday there is, 4th of July. I will always be here. But what is kind of upsetting is, I think when I first started this, when you go online, you expose yourself to the toxic trolls. That people come in here and they hurl abuse at me, toxicity. And 3 years ago when I started, I tried to fix them and coach them back. And then I discovered you can't fix broken. And I also discovered that, because I had to dig into this, and what percentage of the human population is just toxic? And the answer is 2%. And that made me realize, life is just better with that toxicity in your life. If you have somebody toxic in your life, they cannot be saved. The best thing you can do is save yourself and just block them. Block them. That is life advice. So I hope that helps. A weird question. Thank you. Doc Intern. Market makers are manipulating to discourage and shake out Bitcoin from the paper hands. That is why your daily Bitcoin videos are so important, to stay focused, and data have diamond hands. Keep them coming. Thank you so much, Doc Intern. And just to recap what's happening right now, the latest trade, we'll talk about on DCA again in detail tomorrow. And I covered it in yesterday's Bitcoin manipulation video, broke down all the 7 reasons as to what's going on right now. Tons of money's coming in, but the price isn't going up. And the same thing happened in the gold market for 20 years. You buy spot and then you sell the future, or you hedge it somehow, or you get into a short position and you make the split, the spread. And that's what's keeping a lid on Bitcoin price. So when we had $4.2 billion come into Bitcoin in 19 days and the price is basically flat, it's like, what's going on? So that's kind of the answer. It's putting a lid on things. But the good news is people are kind of like, oh no, the lid will be there forever. No, it'll eventually break and blow up and then cause a huge God candle, because they'll have to chase to cover, to hold on to their positions. So that's my view of the world. Thank you as well for your super sticker as well, and all the great questions. Thank you, Andy, Theo, Bert Frank, The Tree, AZ Roller, Vitruvian Maniac, GT350, Signal 103, Super Soul Man, Linda Hoon, Staff, and Dragon 183. I hope I got everybody. I hope you like the show as well. Let me see. I see, and I hope I got yes, I think I got all the questions. And thank you to the mods in the chat. Hope you enjoy the show. Have a great Sunday. I'll see you all tomorrow morning, bright and early. Good night, everybody. Thank you again to Kate and TD Tesla and Sean Donnelly and Super Soul Man and all the usual crew. Bye-bye.